Well, here we are. We've got the fast moves up, fast moves down analogy coming into play. We've got this move from July as we shot up. We consolidated. We broke down through our support levels. Had a quick test to the upside, just a very small impulse, and we have fallen through. Looks very Wyckoff distribution to me. Not that I know the exact pattern, but it definitely has that that level of, up to a high, fall away, and just mitigating itself into the floor. And so what we've done is we have reached our target that we had averaged in. So this imbalance was filled through here. The daily imbalance was filled. We've now created, actually we've still got on this hourly through here, this is still an imbalance which will be challenged as we move further through. So there's very little orders placed in this area between 65,100 and 64,400. Maybe we could probably even go a little bit lower to the 64,300, but we can definitely fill in that area. That 618 retracement was definitely an area of low liquidity, and so that was where the imbalance was formed, and now we're moving into this area where from 64,400 down to the low of 63,280 is an area where we've got a lot of accumulation occur before we had this impulse up, this medium-term impulse up. And then what we're also looking at down here is then we're going to start, if we break this protected low, which on a daily isn't too significant in the sense that, let's just pull it up here. So chart view. So this protected low is basically this impulse, short pullback of 2 days, and then we broke out to the most recent high. Now we're coming back to retest it, and is price going to rest on this area, do a short liquidity grab down to the 50% level and then move higher? Or are we going to come down and retest these imbalances down here? That's something that we have to bear in mind and take into consideration. So, if we go quickly back to the hourly, so the targets that we're looking at here is this protected low, and we've got two imbalances. We've got two liquidity wicks down here. We've got this one here at the level of 63,670, and we've got 63,355 with the liquidity low of 63,280. So there is potentially 3 levels of liquidity from there, but then as we start to come to this area, this is the imbalance that is formed on a daily. Although it looks like it's come up, mitigated, shot up, come back, retested, and moved away to higher prices. On a daily, that shows up as an imbalance. So we can keep that in mind. However, so imbalances are definitely areas where price usually falls to, and it doesn't hang around in there very often. So we can look to that as an area where price may very well come down, have a slight uptick potentially, and then come down into this area. Or this may just be 1 hour of up, and we may just continue to fall through. It will also depend on where the what the S&P is doing in the next few hours to days, because for pretty much all of this week we've been in a sell-off. So Bitcoin is, although it is strongly correlated, there are times where it does kind of move, sometimes divert, but it's definitely going to be something that we need to keep watching. So I might just hide this for the moment, and let's form a new Fibonacci from this impulse low, from this low. Oh man, wrong thing, my bad. Alright, let's go. And this impulse high to this impulse low. So this is the area of 50%. Then we got 618, and we got the 786. So it is still a chance that we may actually come down towards this 786, because what we're looking at here, if I am to put this as a potential buy zone, let's put this as a point of interest long. So the reason why I may consider this is that if we are looking here as see, why is that imbalance there? So there is an imbalance, a daily imbalance here. Imbalance through here. And an imbalance through here. So there's very low liquidity through here, which may just prove that we may just fall straight through, that this was a lackluster bounce to the upside. However, what we're looking at, let's just move out to a 3-day. So with this entire impulse from the lows of 38,700, where the last leg up, my apologies, where the last leg up caused the move to the high of March, and now we've just bounced around and we've been mitigating and then testing the 50% level, which is just here. Let's just put a nice big fat zone through the middle of that. Let's make it really thick. So that's the 50% level, and basically we've come up, we've retraced, and we've just touched it, slightly broken through, and now we're on our direction back down to either touch it, reject, or above. We really don't know at this point. But what we do know is that above the 50% line, we are looking at three single days of imbalance. If we look at it on a 3-day chart, that's a really big imbalance between those two. There's not a lot of mitigation at all, and so for price to fall back through, we are really looking at that. So I'm only looking at, with this move down until we get support at this protected low, I'm looking at only taking a few minor moves to move to the upside, because I want to see this deeper mitigation. I want to come in and reach this area, at least this protected low. I want this to be touched, and then I'm definitely looking for a move to the upside, but I want to average myself down into this. As we come down into here, I'll average this in, and then I'll bring this long entry, I'll average that down into a better price position, so that as price moves upwards, we're in a better position to capitalize on that move. So that is what I'm looking at there. So let me just do a quick tidy up of some liquidity levels. So that one was definitely touched, mitigated. I'm going to leave this liquidity retest. I'll get rid of that one because that makes it super busy. I will get rid of that one. I'm going to keep that liquidity retest because it merely just touched, like barely touched it and then fell through it. So that's an area of consideration that we really need to mitigate that area a little bit better. So as far as liquidity wicks, we are seeing this. As an area of interest just to watch. Prices come up. That was the high. That was the second highest high. So that's an area. That's a pivot area. Perfect. Alright, so that one's close as well. Let's put it in just so we can see how it all is. It's actually all quite, they're all pretty balanced. They're all quite averaged in, really. So as we move up, it might be something just to sort of watch, and we'll choose which ones to go. Maybe just take out every second one, and then that way we can buy a little more, or we might just buy smaller portions at each move as we move up to go short. But we want to see how the enthusiasm is in the market, what that sentiment is, and we can go from there. But we don't want to buy too much up here until we get confirmation that this is either going to act as support, or we're basically just going to bounce around through it and fall down and fulfill all these imbalances before we take out this very significant buy zone, which is probably the most significant area so far, is that 56 level. If we go through there, I think it's a real shakeout of the market. But we've got so much liquidity wicks that we can find as support. There are imbalances that price will fall through, but it's definitely, like, that's a great area. That's a very significant area. So anything below 57,900 and 56 are really strong buy areas. But we want to make sure, and actually we want to test where this protected low sits, how that shows up for us before we start going anywhere from there. If we actually let's talk out this scenario. If we come here and we come back above and we fall through for a second time, then I will be taking out positions to go short through here. However that shows up as price falls through, for instance, like this, if price falls through this protected low, I'll be placing short orders as points of interest, liquidity wicks for points of interest as we go down into those deeper levels. But I want to see I'm not going short until we test this protected low, see where we go from there. Is that strong enough support? Is there enough buyer's interest? Or is the greater market and the US economy going to pull us into a deeper form of distribution? And that's just something that we have to wait and see over the next hours and days. So that's it for today. Thanks for tuning in, and we'll see you tomorrow. Ciao.